Okay. So the Genius Act has been passed in the US, which essentially stands for Guiding and Establishing National Innovation for US Stablecoins. This has happened in 2025, and suddenly there's a lot more legitimacy to cryptocurrencies, purely from the perspective of stablecoins, at least. And a lot of different countries will actually feel the pressure to jump onto this and legitimize it, even within their own ambit and their own jurisdiction. And to explain all of this, I've got my friend Aditya. Aditya, I'd want you to help me understand exactly what has changed with respect to the legitimacy of stablecoins in the US. Which all other countries do you think will now also pass legislation similar to this? And where do you think is India on it, or what's going to change for people who are in India?
Yeah, awesome. So, first on the act, right? It's like the US has passed this act which has said that payment stablecoins are legal, which means that it is now okay for any private company to issue what is called a stablecoin on any public network like Ethereum, Solana, Base, whatever your favorite network is. They can now issue, which is effectively a cryptocurrency of some kind, but is now legal for you to issue this for payment purposes, right? And then there's some safeguards, like for example, you have to have certain reserve requirements. So it minimum has to be backed 1:1 with US dollars or US short-term treasuries. You have to have a fixed redemption window, so if anybody wants to go from that stable coin to an actual US dollar or a traditional US dollar, it should be doable in whatever fixed period of time. And then it lays out a periodic reporting, audit framework, etc. So that's broadly what's happened. But what this has done essentially with one signature, which was 10 years in the making, is that any private company in that is based in the US that is regulated under this framework can now essentially issue digital dollars, right? And I sort of wanted to use this conversation to talk through the implications of that, why, and like you said, what that means for other markets and how India can respond to this. Just our point of view on how India can respond to this. There are risks obviously that come with this. How you mitigate those, but the opportunity, and so that you don't end up throwing out the baby with the bathwater, type of thing. The first thing to do is like, what is a stablecoin, right? And so we've now spoken a few times. We've spoken to Rags about caste, etc. So let me put the question back to you. Based on everything so far, what do you think stablecoins are? Like, what's your understanding of stablecoins?
Wonderful. So, my understanding of stablecoins are that typically the biggest demerit with cryptocurrencies is the fact that it's become quite speculative, and people launch it, and then based on demand and supply, there are a lot of people who've done pump and dump, and a number of people have ended up losing money because it's all linked to demand and supply. And now, stablecoin is essentially a cryptocurrency which is backed by the US dollar, and its price is going to change based on the forex fluctuation or price of the US dollar compared to, say, any other currency that we would be speaking about. And only kind of fluctuation would be what you see with the US dollar, which relatively is say a more stable currency when you compare it to other global currencies, given it's the most widely accepted. So how I am looking at this or understanding this is, and I'll give a very rudimentary example, is think like cred coins. Today there's a joke about how when people get cred coins or points on different I don't know,
Apps.
finance
Yeah.
apps, or even the fact that you've got certain apps where you engage with a transaction and there's a cashback, but the cashback is not necessarily cash. It's in the form of certain points that you can redeem at certain vendors for certain services. We're kind of saying that all of these people have different points and a different universe where you can redeem them for a discount on certain other services or products. This kind of backs all points, or every private player who decides to issue points, they can do it as a stable coin, and the price is not going to fluctuate based on demand and supply. But at least it may open up the universe for where all you can use those stable coins, and not necessarily just to say that it's going to be for a 20% discount on Domino's
Yeah,
because that's my Paytm code or
for
cashback
sure.
allows me to do. Yeah.
Yeah. So,
So I'm
yeah.
saying from a currency perspective, it's a lot more usable, and it gives kind of like a common denominator So today, if for all my small time payments I use like an Amazon Pay, I load up my Amazon Pay wallet with a certain amount of money and I use it for like my grocery payments. Tomorrow, if Amazon gives me some Amazon stable coins in return as cashback, for me, when I'm making grocery payments on Blinkit and my Amazon Pay wallet is linked, I may also be able to use my cashback points in the form of Amazon stable coins, which is one is to one Indian rupees. Is that correct?
Yes, so there's two interesting things you said there, right? One is that the reason stablecoins came about was because the early sort of crypto tokens were inherently volatile. Even the ones that have proven resilient, like Bitcoin, Ethereum, etc., have had their extreme highs and extreme lows, and then there have been thousands of others that just came and evaporated, right? And so there was this need for a settlement asset within the crypto trading world, right? And that need for a settlement asset, which, like you said, should not be volatile, should be pegged to something outside the crypto world, like the dollar, which was the most widely used currency even today, is where the stablecoins came from. And yeah, to your sort of second point about reward points being locked in to different apps, stablecoins that are issued on public networks are inherently usable by anyone. So to take your example, if Amazon and Blinkit were reading public network stablecoins, you would not even need to link your Amazon wallet, right? You could just use those coins that were issued in Blinkit directly, even irrespective of whether Amazon wanted you to or not, in theory, because they're on a shared network, right? And that's the other thing that makes them so powerful. So just for folks who may not have been following stablecoins at all, right? Essentially, a stablecoin is created when somebody takes traditional US dollars, whether the physical notes or a short-term bank deposit, deposits them in a bank or like a verified custodian, which is like a TradFi institution, locks them up, and against that deposit, they issue tokens on any number of public networks that they want to, where they say that one token represents $1, right? That's essentially what a stablecoin is. So it is, if you look at it technically, it's like any other cryptocurrency issued on Solana, Ethereum, whatever network. It's just that the issuer of it is making a promise that I have the dollars here, and so if the price ever goes down, they can buy it back and maintain the price. And as long as people have faith that they do have the reserves, the price will remain at $1 because otherwise there'll be arbitrage, etc. Right? So that's essentially what a stable coin is.
Yeah, so my question is, now that it's been made valid in the US or legitimized in the US, does it mean that anyone who's using these app counterparts in the US market, uh, let's think there is Robinhood, which is kind of like Zerodha. Um, Now today, any of these four apps that you've shown can issue stable coins to end users. Quite like I have a Google Pay or an Amazon Pay or a
That's right.
Paytm in India.
That's right.
The end consumer is going to download one of these four apps, load up money onto it, convert it into
No, no, no. The
US dollars.
No, so the end user won't have to do all of that. There will be companies that do it for them and just let you buy the stable coins in one shot or sort of receive them. So there could be a few different flows, right? Um, you have if you want to go and just buy stable coins, yes, you can do that. It'll be like buying forex in India, or like it'll be like any online transaction where you just input your credit card and you can buy the stable coins and do whatever you want with them, whether you want to trade them on an exchange or send a remittance payment or make a business payment, etc. But in many cases, a lot
Does it
of
come into a crypto wallet?
it can, yes. So the biggest unlock of stablecoins is that you can now download dollars into your phone the way you can download an app, right? And so on the left, you have examples of the forms you have to fill to get access to dollars, like traditionally. And on the right, you have like a mobile wallet, like a browser extension that you can just receive these stablecoins into. And they're as good as dollars now because of the Genius Act that has been passed. They're not recognized as sovereign money, but they are payment instruments that are recognized by the US government, which is like which sort of gives them the which then gives them the legitimacy to be used anywhere that you want, right?
Like a check, for example. I mean,
Yeah,
check is not a currency note, but it is legitimately accepted for making
that's right.
payments.
That's right. That's right. Yeah. And so
Okay.
this is both amazing because there's it makes online commerce and transactions and payments really fast and cheap in a currency that is universally in demand. But it's also a problem because if you're not the US, you don't want your country to start functioning on dollars, right? Like there are real risks for sort of this bottoms up dollarization that might happen. It's not my term. I think one of the folks I heard this somewhere is almost like um, a feature that the US perceives that okay, it's a good way to reshore up demand for the dollar, which is coming under some pressure now from central banks, right? And we'll sort of
And
get
with
into
two
that.
retail investors in a way.
Yes, and incentivizing your private companies to go to retail users, not even investors, right? You don't have to be an investor. You're using these apps, and you end up with these kinds. So okay, I'll talk about the path we took to get here, and what the implication is, right? And in the headline for anyone who's interested in the headline, I think the headline is that I feel like India should embrace stablecoins at the banking system level and then have sort of controls on stablecoins at the user level, right? So you should, as a banking system, uh, allow people to accept stablecoin payments, whether it is via banks, fintechs, payment apps. You can choose, like the RBI can choose how they want to license it out. But you should allow people to accept these payments, but then you should apply all of the rules around purpose code and FEMA and LRS and KYC and pay out in INR, right? I think that is a tenable framework that can ensure that both the Indian developer or exporter is able to access the new payment rails that are coming up, but we're able to maintain, whatever capital controls and sort of currency policy that we might want.
Okay. So what you're saying is that, say for example, if in India someone needs to purchase forex, it is for a purpose, which is if I'm traveling abroad for a vacation and personal expenses, or I'm sending an amount to a vendor who could be anywhere in the world, and I'm making that payment. Banks always come back, give us a form, and say, what is the purpose code? Can you show us the invoice against which you're
Yes.
making this payment? Or when you're importing something, you need to give all those details. So, quite like we make payments in the form of dollars and euros and dirhams, this should just be added on as
Yes.
another more foreign currency in which a person can make payments, which will, in effect, over a period of time between two parties, reduce the forex conversion fee and stuff like that. And people
Yes.
will then be able to keep the
Yeah.
US dollars and use it for international payments. And what you're saying is the capital controls are going to be from a perspective of, okay, if your LRS does not allow you to make more than $250,000 worth of payments to go outside of India,
Yeah.
include that into the list of foreign currencies also as US
Yes.
dollars, and impose your conditions on you can't have more than this much forex just lying idle.
Yes.
So what you're
Yeah.
saying is impose all of that. Just add USDT as one.
Yeah,
Uh,
just add any of the regulated stablecoins to that list, and instead of treating them as VDAs, where you're thinking about taxation and TDS, think of them as foreign currencies and apply that framework to them. There's actually an essay by Balaji Srinivasan, which is 4 years old, I think 4 5 years old, where he makes this argument for wider crypto regulation, saying that India should regulate crypto under the FEMA law, and it may not apply to all cryptocurrencies, but it definitely applies to regulated stablecoins, in my opinion, now because they are literally being designed as a payment instrument, right? And so, yeah, just treat them like you treat any other foreign currency, and let banks and exporters and anyone who's also earning in dollars. And the reason for this is that we, I would make a bet or a prediction that more and more of the international dollar flows will start happening on stablecoin payment systems. And so, if your banking system or your financial system cannot accept or send to that system, you'll start ending up with missed opportunities, increased cost of doing business, which is not good for anyone, right? I think that's broadly the argument, right? And so there's two sort of pitfalls to avoid. One is outright ban. If you just ban them and say we don't want to use them, that becomes a problem. But the other is if you say that we'll only use enterprise stable coins or bank issued stable coins and not use public network stable coins, right? That is also a risk because a lot of the activity is on public network stable coins, and so you should be able to receive those as well. So how did stablecoins come into existence? Because if you're listening to this and you don't live on Twitter, you may wonder, okay, why would someone take these dollars, issue them on a public network? Like, what is the point of all this, right? The whole point of cryptocurrency was to exit the fiat system. So why did you go and issue the fiat dollar onto this, right? And so that was the argument we were making earlier, is that you needed trading pairs, right? So if you look at the image on the right, I've just taken a screenshot of one trading terminal. I don't use this, and I'm not telling anyone to trade, but what you can see is that all the trading pairs are denominated in USD, right? Like, the reason for that is because it's easier to trade against a stable base than a variable base. And so because of the need of the settlement asset, the chart shows that from 2018 there was $0 worth of stablecoins issued, and in 2022-23 is like over $150 billion of stablecoins. I think now it's at 250 billion dollars in total, if I remember correctly, right? So the issuance, the demand, and the most use of stablecoins happens in like public crypto networks for crypto economic activity, right? And whatever you think of the activity, you may think that all crypto coins are a scam and trading is bad and all of that. Those dollars are still good, and those dollars are now regulated by the US government to be payment stablecoins, right? So the first thing I would posit is that we will see there's a prediction that this 250 billion will become 2.5 trillion next year or in the next few years, in terms of stablecoin supply, right? A lot of that activity will be on public networks, right? Because the most underserved customer is on those public networks, right? If you're on a permissioned bank network, like there are many banks that are trying to do their own private blockchain or their own private network and issue products there, and they're selling to existing customers, right? That's good. I mean, all adoption is welcome. But the argument there is that that that's not an underserved customer, right? At best, that's like a technical change or an automation change. If you're banking with, say, a JP Morgan, you have access to dollars. Okay, it's a tokenized dollar now, big deal, right? What changed for me as a customer? It's the same bank. Whereas on public networks, you have underserved users who are not getting access to these products from their banks, and therefore the activity is going to continue there, right? And so, the next step for stablecoins after uh, being like reaching $100 billion for like crypto settlements, then these new use cases came up, right? So they started being used for commerce, right? So you have like Stripe and Shopify are planning to integrate public network stablecoins into their merchant network, which means that if you're accepting payments with Stripe, or if you're a merchant on Shopify, you will soon have the option, if your jurisdiction allows you to, you will have the option to accept public network stablecoins for payments. PayPal issued their own, stablecoin TYUSD to use for merchant settlements. And there's this website called Travala.com, which for a while lets you book hotels and flights with all crypto and stablecoins as well, right? And they're integrated with Expedia. And so all of Expedia's inventory is on Travala.com. And so these, commerce use cases started coming up. Then you had like card networks adopt them, right? And so MasterCard and Visa are working on stablecoin settlements within their own card networks, right? And as of today, they may not be doing a lot of volume yet, because if you're on the MasterCard Visa network, you're happy to sort of settle in fiat and use that. But they're making these bets because they understand directionally this is important payments technology, and they should be able to settle natively in some of these assets. And they also are using public networks like Ethereum and Solana, because they realize that that's where the demand, that's where the demand comes from, and that's where the best conversion rates will be, the most liquidity will be, etc. Right? You've had like VC acquisitions, VC interest has sort of grown in the stablecoin industry, because Circle has recently IPO'd. So Circle is one of the biggest issuers of stablecoins, one of the two largest issuers, Circle and Tether, and Circle IPO'd and is now,
Is it about like some $65 billion
yeah,
worth?
exactly, yeah, it's like a $60 billion market cap
So
company. Yeah, it was operating in the regulatory gray area for the last 10 years because the US didn't have a framework. And now that the switch has flipped, most of the growth is still left on the table at this point, right? Because you got this far without clarity. Imagine what you do once you have it. And then like you had like Stripe acquire a company for $1.1 billion, which does stablecoin infra, right? Which so is sort of signaling to VCs that public network stablecoins and infra has like this growth upside, and you're going to see like a Cambrian explosion of companies that are building these products now, and you don't want your population or your founders to be excluded from that, right? Then the banks came, and so you have now examples of Siam Commercial Bank, the Bank of Mina, Societe Generale. All of these banks are sort of exploring cross-border payments using stablecoins because they're sort of downstream of this trend and they see where the wind is blowing. And then most importantly, like sort of like a macro point is that the 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 Genius Act in a way is designed to create new demand for US treasuries, right? If you see, the US debt is at an all-time high, and so like I said at the start, because there's reduced appetite among countries to buy US debt, they've now found a new buyer in American companies for US debt, right? Because by having the license to issue stable coins, companies are incentivized to buy this debt and issue stable coins against it, and they can build very good businesses on top of it, right? Because once, if you are a marketplace that does buyer and seller side payments, uh, if you do it on your own stablecoin where you keep the float, right? You keep the float as it is. You earn, as of today, I think 4.5% interest on that, and all of your volume, your GMV, will start happening in an asset that you have issued in some ways. That's quite a lucrative proposition for any marketplace app like Airbnb, Amazon, Uber, Google Ads, like all of these payment networks or marketplace networks that do volume.
Would you would you say that it's something similar to how people talk about the case study of Starbucks being a bank?
Yeah,
Because people load up their Starbucks cards and then use it for coffee,
yeah,
and then they're able to earn so much interest out of that float.
yeah.
Do you think it's going to be something similar and it's kind of democratized and given everyone the infra to be able to do it for their own selves?
Yeah, and
And that is the primary incentive for companies to do it?
for sure, I mean that is a big incentive because it hits it in the short term, with interest rates being where they are. It bolsters your bottom line without materially impacting your business in any way, right? Is one way it could play out.
Mm.
But what you can also do, I think there's two distinctions or two upgrades from the Starbucks example, right? One is that stablecoins are inherently global, right? And so when Stripe launched, I think Stripe, when Stripe launched their stablecoin product, they went live in like 100+ markets in one go, right? So markets that they felt from a regulatory point of view both did not have access to dollars and B would be okay with them doing these payment stablecoins. This was before the Genius Act, by the way. They went live with a stablecoin banking product in 100+ countries in one go, right? Because it's just universal technology. So I think the first upgrade over the Starbucks example is that Starbucks cannot do this outside the US because they'd have to set up banking operations in every country to be able to do this, right? Whereas with stablecoins, you can keep your reserve in the US and do it globally, right? Wherever you're allowed to, at least. And then B is that stablecoins, because they're programmable money on public networks, lend themselves very well to create full stack banking products within the app. So if, every time we talk about embedded finance or embedded banking, if you want to add those features to Starbucks points, you have to do all the work. You have to find, let's say, if you want to make Starbucks points redeemable at a petrol pump, you have to go sign a contract with the petrol pump and agree on a redemption rate, bulk buy, etc. Right? With stable coins, you can just plug in to the DeFi ecosystem or the whatever products are being built on these public networks. You can just plug in and say, okay, now you can get loans against them, you can lend them, you can trade them, you can do all these other things depending on the risk appetite of the company and you things you're allowed to do.
Okay, so I have a question here, which is I'm just thinking from an end user perspective, how will this play out? Do you think it'll be similar to how today, when you have to log into a new website, websites typically give you the option that you can log in using your Apple account or you can log in using your Google account and stuff. And I typically almost always select my Google account and I just get to log in because I don't need to create a new password and stuff. Do you think it's possible that tomorrow companies like Visa may say that, okay, you create an account with us and you load certain dollars or in in our case, people living in India, load up certain rupees and just buy like US dollar stable coins. And tomorrow, whenever I need to make a payment for, say, either a Zoom or a Riverside or any of these tech platforms or SaaS tools that we use, or even say like for a Chat GPT or a Claude, they could just say, pay using Visa stablecoins, and it just automatically does it for me, and I don't really have to download another app on my phone and then be worried about. Now there are so many apps, so many ways of paying, that I think that is such a big friction in itself. Like, I know, even though at times you may really like the UI of Google Pay, but because you're on the Paytm ecosystem and you're so used to it, you're like, I don't care about those extra points that I'm getting, because how many apps will I really manage? It's too intimidating. Do you think that is a problem that'll get solved in some way?
Yeah, I
Or
think
it'll only add to the problem because so many companies will have their own stable coins that then it's just another issue altogether.
so. Like, interestingly, I think yes to both. What I think will happen, my guess is that in the short term, you will have the latter, which is that now that the gates are open, the sort of legitimacy has come, everyone will try to issue their own stable coin and give it distribution, right? Because you stand to make interest on the float. Like the thing to realize is that the interest only sits with the issuer of the stablecoin, right? And as of today, by law, you are not allowed to pass on the interest by law. It isn't even obviously, as a business decision, you would not want to pass it on to keep it to yourself, but there you can have market forces, competition, etc. Here, by law in general, you're not allowed to pass on the interest to the end user, right? And so what the stablecoin issuers do is that they run rewards or cashback schemes with the large minters of stablecoins. So if you're an enterprise customer of these of these like stablecoin issuers, they'll give you an incentive or a reward, which is sort of a percentage of the yield that is passed on as a workaround. So in the short term, it's already happening, right? You have Walmart, Uber, Amazon. They're either thinking about integrating stablecoins or issuing stablecoins. I think Stripe will probably launch their own stablecoin. JP Morgan has launched a tokenized dollar. And so in the short term, as with anything new, you'll make an effort. You should make an effort to see if you can get distribution for your stablecoin, right? But the thing is, launching a stablecoin is easy, but the question is, A, do people trust you enough to use it? B, are you able to generate liquidity for it in all the exchanges and DeFi pools? Are developers who build DeFi applications using it in their products? Are market makers and traders using it? Because you need deep liquidity to be able to have all this on off ramp and conversion and all that to work well, right? And so I think we'll have a cycle where in the short term you'll have a lot of stable coins launch. Many of them will sort of struggle and die out and bridge into maybe a few winners, right? And so I think over some time period, I don't know what it is, you will see a consolidation where maybe the apps that have the largest brand trust and distribution will end up having stable coins that endure and then survive, and you'll probably have like a few, maybe like three, four, five. We have two right now, right? And so maybe you'll have two, three, four, five, but it will definitely consolidate. I don't see a world where you'll have hundreds of these stablecoins.
Do you think there is incentive for, say, Meta and Google now to get into this and launch it themselves? Because if we look at the kind of apps or consumer apps most of us are kind of hooked onto and are already in the ecosystem, it's Apple, there is Meta suite of apps, and there are Google suite of apps, and it just makes sense. And eventually, these are the people who will win because they'll be able to integrate it into all the apps that you already use. And it would just make sense for you to just load up and buy their stable.
Yeah, for sure. I think they will. Maybe if they're too distracted, paying $1 billion to hire AI researchers, which is also a worthy cost. So maybe they take some time. Maybe they sort of start by using Stripe or something, and then take their time to build it out. Because like you said, they have massive network. But like Facebook Marketplace, Instagram does so much commerce. They're trying to embed it now with like creator, paid channels and things like that. And so it definitely makes sense for them to do it. It's just a question of when they choose to do it and whether they integrate first and test it out, or they want to go big and build it out themselves first, is sort of a matter of time. Which then, it brings us to the interesting question of how does this play out in other markets, right? you're sort of damned if you ban and damned if you don't, right? I have great sympathy for the regulator here, because it's not straightforward to say if you ban it, you're excluding yourself from a potentially futuristic payment rail that will hurt the economy. But if you just outright allow it, then you have risk of like dollarization, where you start having dollar driven, peer-to-peer trade that you can't control, destabilizes the currency, etc., right? And I think that's where this nuance of saying that, to at least to start with, you allow it at the banking system layer, wherein people can do cross-border payments with public network stablecoins, and then you decide which way you want to go, right? So one approach is that you can make it interoperable with the CBDC, right? You could say that all stablecoin payments will be converted into e-rupee payments and will be used as such, and then what that lets you do is create liquidity for the e-rupee with stablecoins, and not have to actually buy dollars physically every time you want to convert them here, right? You can abstract it out, at one layer. You could do that.
Then even
Yeah.
that would be great, right? Like for example, if a customer wants to pay me from outside of India and I receive say US dollar stable coins and my bank just converts it to e-rupee. Finally, I have some use to the e-rupee because otherwise I can't even tell what's the difference between me making CBDC payments or me making payments on UPI, which goes directly from your bank account. To me, the difference till date is not extremely clear.
Yeah, no, for sure. I think that's one direction you could take. The sort of other direction many countries are taking is encouraging issuance of a stablecoin pegged to their own currency, right? So I think Singapore, Hong Kong, South Africa, Japan, the UK, I'm not sure, UAE, like a lot of these markets are create working on frameworks that allow for multi-currency stablecoin issuance within their region, right? And so the other thing you do is you tell companies that, hey, you know what? In India, you can use a dollar-backed stablecoin that is issued in India, right? And so you create holdings of, let's say, US treasuries or Indian treasuries, whatever the currency combination you want to go with. You can get that issuance done in India. Gift is a great avenue for doing that because it sort of is geographically in India but operates, dollar denominated bank accounts. And so there's multiple directions this could go in. It seems clear that you should not ban it. It seems clear that you should not just allow it without, like, unchecked, because I also think that, like, India's capital controls potentially insulated us from the 97 currency crisis, the 2008 crisis, and so there's benefits to it to the domestic economy. I think it's just a matter of finding like a narrow balance there and saying that it's like any other cross-border payment. It will be put onto a list of foreign currencies as long as it's a regulated payment stablecoin, and your bank will take care of giving you rupees, whether it's INR as it is or e-rupee, and the bank and RBI can manage whether they want to hold stablecoins as a custody asset, they want to swap it out for US treasuries, they want to hold it against like if just like like imagine if the Indian CBDC is paired with US denominated stablecoins in pools, in liquidity pools. It creates a new avenue, like it creates a new dimension to FX markets as well, right? And so there's many benefits that you can get into as a level two thing. But I think the first thing India should do is signal that would be okay at the banking system to accept this as payments. The risk is if they
But
choose to ban
tell
it,
me
or they
something.
say only private. Yeah, sir, good.
You know what I'm thinking is how the government built the UPI system and it kind of took away the incentive for banks to actually make money on transactions because it's all free and it's freely available. And now they're planning on charging a fee on UPI transactions above a particular amount because they're like, we need to keep creating some incentive for all these banks to make payments. Don't you think that the fact that cryptocurrencies are saying, we want to decentralize and be away from banks in some way, do you think for the regulator it will be necessary to have banks as some kind of custodians of trust? And when they do that, they will need to incentivize them through some kind of transaction fee, even when there is trade happening in stable coins? Or do you think that the e-rupee or the India CBDC is going to be, say, under the RBI and it will kind of become their, like the government's social responsibility and duty to ensure that it's free and available for everyone to transact on, because today when you make banking transactions within India, you don't really pay your bank like a transaction fee, right? Like it's freely made available. What is your crystal ball gazing on exactly how you think it's going to play out in India in the short term?
I can tell you what I hope for. I don't know what will happen. What I hope for is that you can do both the things you said, right? So what you can do is domestic CBDC payments can still be kept free of cost, especially in cases like, if you're doing a direct benefit transfer, if you're doing some of the social welfare payments that are made, it can be value based, it can be purpose based. CBDC lets you, program all of that, right? So you can keep domestic payments free as the social goods layer. But anyone who is sending a payment abroad or receiving a payment from abroad can be charged a service fee, can be charged a forex markup fee, the same way that the banks do today. The only thing is that the margins will be sort of, depending on the licensing regime chosen, the sort of margins will be competed for in the market, right? So if you choose to only allow banks to do it, banks will sort of price it maybe the same way they price their products today. If Because this is such a technology driven product, if you allow fintechs to do it, like Razorpay, Cred, Jupiter, some of these folks, you may then end up creating competition for products where maybe someone will choose to offer it as a loss leader free of cost and absorb the conversion fee. Maybe someone will choose to charge a fee, but there'll be pressure on the fee from both sides. So I would hope that if it's thought of as a payments product and anybody with payment bank licenses is allowed to do it, that would be great. But the problem is payment bank licenses, from what I understand, and I'm not a lawyer, but from what I understand, don't let you do foreign currencies, right? The banks are the only ones authorized to do foreign currency payments, and so maybe that's where we start, and then the RBI can decide how they want to open it up. I do think for a country where the dollar is not the native currency or freely usable, you need to have some trusted agents that are regulated by the RBI who are doing the on off ramp. Otherwise, and and sort of everything else you treat as cash, right? So the self custody crypto wallets that you're holding, you probably end up treating as cash. And so the same way, you're not allowed to hold more than a certain number of dollars as cash, you start enforcing that. I think a lot of the crypto community might hate me for saying this, but it's probably the only way that this can be regulated. And so if you want to make progress, you have to sort of embrace some of these things that might seem painful or antithetical to whatever the original crypto values were, but it's the only way you make progress. And don't disconnect yourself from where a lot of the like international payment system is headed.
Got it. No, I think this makes a lot of sense, and hopefully in India, in the short term, we might see a lot of subsidization by VC money through these fintech apps whenever they have to open it up to consumers. And maybe the first kind of transactions or the go-to market in India is probably going to be some kind of uh, you know international payments. Can you imagine what those international payments would be like? Do you think it's going to be a lot related to be agri export, or they might do it like purpose code by purpose code in some way? Do you think that's possible?
I The examples I can think of is that let's say if you're a developer, if you're anybody who is working remote, right, and getting paid by someone in the US or in Europe, their payment systems are going to move to stable coins pretty fast, right? And so maybe the first
Hmm.
use case you start with is freelancers who do services exports, like developers,
Receiving.
designers, yes, who are receiving
Yeah.
stable coins. Right? It also fits well with the inflow, priority versus sending money out.
And
Exactly.
yeah.
And so I feel like that is an easy place to start, because these are the folks who are working typically at like the cutting edge of some tech.
Mhm.
They're working for some startup. They're most likely to be early adopters on the other side of this technology. And maybe that's where you start. You can add on like
Yeah.
anyone doing remittance payments, I think is another good use case, right? Because um, I don't know if this happened or not, but there was supposed to be a 5% fee on remittances sent out of the US. Maybe that will be exempt for stablecoins early on because it's something the US is trying to promote. I don't know. I'm just guessing. But I think like remittance
Yeah, but
payments
it
is,
makes
yeah, so I feel like remittance payments is another big one. I think US India is like probably one of the top five biggest remittance corridors in the world. So that's another one that makes sense. Exporters of any kind, right? Anyone who is exporting something and receiving payments against it, you could open up those use cases as well. I think how they choose to stagger it, I don't know, but I feel like these are some that I feel like are easy to start with.
So they might kind of tell banks that you need to now start accepting US dollar stablecoin payments, and people should be allowed to invoice. And if they kind of think of that as legitimate currency or foreign exchange and not VDA, that in itself is a big win for the
Yes.
ecosystem going forward.
Yeah.
And they could mandate that, okay, all such payment received has to be converted to rupees and kept in your rupee bank account and stuff,
Yeah.
not in the form of some CBDC. And even if that happens, that's absolutely okay, because at least it's a win-win and it's a start for the entire ecosystem.
Yeah, for sure.
Wonderful. Thank you, Aditya. That explains quite a bit. Is there anything else that we've left out in this conversation?
No, I think this is a good starting point for anyone who's interested.
Wonderful. Thank you.
Yeah, this was good fun.